Hey, Dan Passarelli here. Last year, I did something that I don't usually do or haven't historically done throughout my trading career very much. And that is, last year, I kind of bought a lot more straddles than I typically do. And there's a reason for that. Well, first of all, there's a reason why I usually don't buy straddles is because they're pretty hard to make money on. They're hard to make money on unless you buy them when they're really cheap, when the market has a greater propensity for movement. And boy, that's a tough balance. It's tough to find those opportunities, but there were more of them last year. Now, I've been talking a lot about the VIX, and I believe I mentioned that yesterday or the day before, that I felt that it was pretty likely that volatility, implied volatility, and historical volatility still remain high for a while. And of course, hey, you know how it always goes. As soon as you say something like that, well, today the VIX is down, and yesterday the VIX was down. We're down about 4 points since then. I don't really talk about the VIX in percentage because it's just kind of weird since it is a percent already. But yeah, it's down from 30 something to 26 something. But I still stand by what I was talking about. So what I think is an opportunity that might be lining up soon is the opportunity to pick up some more cheap straddles. Now, why do I say that? Well, look, take a look at just all the massive volatility you've been seeing. I mean, you don't have to know anything about options or volatility analysis or anything to say, holy moly, it's been volatile for the past month or so. Those of you who are familiar with volatility analysis, you see that here in the historical volatility and the implied volatility. It's been all over the place at, historical highs. Right now, it's still about the highest it's been in the past 6 months over this volatility regime that we've seen for the past month. But it is getting a little bit cheaper, but the market itself is still pretty volatile. Now, the reason why the market was up quite a bit today is because Trump has been talking to China, and maybe there's a possibility for a deal to work out there. He's talking to Norway. If a deal does get worked out with one of our major trading partners, this, as you can see, I mean, some of that potential good news is already getting priced in. People are trying to get ahead of that news. If that news does come to fruition, we could see the market take off pretty high to the upside, and a straddle is going to be a good friend to you. If we see talks fall apart, then this couple of moves we've seen in the past 2 days, both in the S&P 500 and in terms of volatility, well, they're just going to reverse themselves. And a straddle is going to be a really good friend to you under that situation. Now, we're not quite there yet, but as the market gets cheaper, as implied volatility gets cheaper as measured by the VIX, we're getting closer to that point where I'm looking at some of these straddles. That being said, you'll be the first to know once I throw one of those puppies on. Hope that helps. This is Dan Passarelli, Trade Smart.